to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at FTAI, or FTAI Aviation Ltd. FTAI owns and maintains commercial jet engines with a focus on CFM56 engines. Here's the barchart.com technical opinion rating for FTAI. The bar chart rating is a 100% buy and ranks in the top 1% of all short-term signal directions. Long-term indicators fully support a continuation of the trend. According to Prime Trade Select rules, the stock is in a bull trend on a monthly basis if the stock price is above the 10 period or 10-month simple moving average. The monthly chart shows that FTAI is above the moving average line, so the monthly trend in FTAI is up. Now we're going to look at the daily chart. The stock is in a bull trend on a daily basis if the 50 period or 50-day exponential moving average is above the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The blue line has been above the green line all year, so the daily trend in FTAI is up. Next, we're going to look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy calls if the stock price is above the upper Keltner channel line. Anywhere inside the Keltner channel or even below the Keltner channel is fine. FTAI is below the upper Keltner channel line, so FTAI is inside the buy zone. Since the trend is up, we want to buy a call. FTAI has 8 option chains to choose from. We're going to use the February 16 option chain. Right now, the Feb 16 options have 75 days to expiration. Here's the FTAI option chain for Feb 16. FTAI closed at 42.27 on Friday. That means any calls on the list from 20 to 42 are in the money. Let's take a look at the profit potential for purchasing the Feb 16 42 strike call, which is the closest strike to the current price of the stock. The bid-ask spread for the 42 call is 250 to 295. We tried to enter at the midpoint, so we'll use 275 as the buy price. Our call option calculator shows the profit potential for this call based on FTAI price changes at option expiration from flat to a 12.5% increase in price. We can see that if the FTAI stock price is flat at 42.27 at option expiration, the 42 call will lose 90.2% of its value. Ouch, this is an unacceptable risk. That kind of loss can wipe out our trading account in a hurry. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock only has to move up 1% for the call option we purchase to break even and start profiting. Now let's take a look at buying the 37 strike call to see if it qualifies for the 1% rule. Here's the call option calculator picture for the 37 call. According to the 1% rule, we want the call to at least break even if the stock price is up 1%. The calculator picture shows that if the FTAI stock price is up 1%, the 37 call will lose minus 6.7% of its value. We want that to be break even or better, so the 37 call does not meet our requirements. Let's see if the 32 call will work. The bid-ask spread for the 32 call is 850 to 13. We tried to enter near the midpoint, so we'll use 1070 as the buy price. The 32 call is close enough. If the FTAI stock price is up 1%, the 32 call will lose $1. Down $1 is close enough. So the 32 call is the one we'll buy. The call option purchase calculator also shows that if the FTAI stock price increases by 2.5%, the 32 call will make a 5.9% or $63 profit. If the FTAI stock price increases by 5%, the 32 call will make a 15.7% or $168 profit. If the FTAI stock price increases by 7.5%, the 32 call will make a 25.6% or $274 profit. The 10% and 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the FTAI stock price does not make the expected move up and remains flat at expiration, the 32 call would only lose minus 4% or minus $43 compared to the minus 90.2% or minus $248 loss for the 42 strike call that we looked at earlier. Now we want to review a call option debit spread, aka a vertical call spread. For this spread, we want to buy to open the FTAI Feb 16 35 strike call and sell to open the FTAI Feb 16 40 strike call. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 35 call for $760 and sell the 40 call for $465. $760 minus $465 equals $295. So the entry price or debit cost for the spread is $295. The call option spread analysis calculator picture shows that the spread will make a 69.5% or $205 profit if the FTAI stock price declines by 5%, remains flat, or increases in price when the options expire. If FTAI is down 7.5% at expiration, the trade will make 39% or $115. Creating the debit spread will allow us to collect a $465 cash credit to our brokerage account for the sale of the 40 call. As we said on the previous slide, this reduces the cost of entering the spread to $295. Here's a note regarding earnings reports. The next FTAI earnings report is scheduled for January 24th, 2024. Let's review the trades one more time. The first trade was a call purchase. It said to buy to open the FTAI February 16 expiration 32 strike call for $10.70. We also reviewed a spread. The spread said to buy to open the FTAI Feb 16 35 strike call and sell to open the FTAI Feb 16 40 strike call at a debit of $295. That's it for this week's Optioneering Workshop. Thank you for joining us. We look forward to seeing you again next week.